Welcome back to the channel, guys. Click like, subscribe for more content. And this time we're going to talk about our strategy. Now, earlier in the series, I showed you how to set up charts and what all this stuff means. Now we're going to the actual strategy, the actual ways we're going to actually enter trades and look out for how the market is moving. So, two things you're going to need. You're going to need two indicators. The first one is the Bollinger Band. We talked about the Bollinger Bands earlier in the series and what they can do. And then also the RIS. We're going to need both of those. And I'm going to actually show you how this strategy works as far as scalping. Okay, so we're going to actually insert indicators. And then we're going to actually go here. Bollinger Bands. Okay, so we want the Bollinger Band, the first one, to be at 20. We want it to be at 2.0. The first one, close. You can change the color. Now you want the actual colors to be different. So when we enter our lower ones, we'll actually enter a different color. So this one we're going to actually do not do blue because we got a blue candle there. So we're actually going to do something like a green. Let's see, a real dark here, dark green. Okay, make sure the line, you can change the lines if you want, if you want to dot it. I always keep the line solid. And there you go. You see the moving average. You see the Bollinger Bands. Now, again, we're going to remember the farther away it is, the more liquidity they have in the market. The closer they are to the moving average, which is this middle line, is the non-liquidity we have in the market. So that's one Bollinger Band. You actually want to go to two. We're going to do two. So indicators here. And if you're trading on MT4, this should be easy. Okay, so the next one we want to do is 0.5. We want to make sure that's 0.5. We want to make sure this is different. We got red there. So let's go something dark. Let's go. Keep that maroon. Okay. So this is the upper band, the maroon one. The lower band is the dark green one. As you can see, if you zoom out, there's a lot of liquidity in that market. Okay. So next indicator we're going to actually do is the RSI. We're going to find that under custom. There it is. I want to make sure they on all time frames is okay. Common. Okay. Okay. So the levels you want is 70, 30. 70, 30. Okay. I'm going to click add there. No, we don't want to delete that. So 70, 30. The type, keep that. Let's see. Make it gray. Make that dark gray. Hit OK. And there we are. Okay, there's the bands right there. Okay, so we want to zoom back in. Okay, so once this touches the lower band, or the lower band here, that's the lower band right there, the green band. So once this touches this green band, and the next candle doesn't break out, which is the next candle doesn't go up, it doesn't go down and touch this line, you want to enter the trade on the next. So if it touches this line on the next candle, you want to enter a buy. Okay, so how do we know this? We're going to use our RSI. Let me see. It doesn't have a lot of movement in there, but usually it's choppy and you can actually draw it on it, but there's nothing moving there. So let's actually look at the hour chart. And hour isn't doing well. Okay. Actually, let's add our RSI to this chart here. Indicator, custom, RSI, 730. 14 is the value. That's correct. And boom. Okay, so as you can see here, zoom in here. Okay, as you can see here, right here on this trade, it dipped down and it hit the lower band. Okay, so it hit the lower band. So on this candle, once it closed, you should have been taking trades all the way up, at least 3 candles. Okay, once this is stuck in between this lower band and the moving average, after this candle right here, you would have closed the trade here. So anything between here and the moving average would have been a buy. So you would have been buying all the way up until you would have been entering the trade at the moving average. Okay, sometimes you might have breakouts like this here, where you go all the way up, but just to be safer, to make sure your executed trades are going through, you want to make sure you're at the moving average. So this middle line here is when you want to exit a trade. So you figure out where the middle line is. You put in a stop loss here. So you go about 20 pips, 10 to 20 pips down, and then you go at a take profit around here. So you don't want to go at the band, but you want to go somewhere near the band. You would have probably maxed out, and then you would have won that Pacific. Well, you would have won that Pacific trade. Now, how you can be extra careful is here. You draw a line here, and this is why we're doing the RSI. Okay, so as you can see here on the RSI, it dips below 30. Anytime it dips below 30 or it goes above 60 to 70 or closer to the 70, it's gonna mark it back down. So since we're at 30, we should have known it was going all the way back up. So we would have marked the line here. Actually, let me do the diagonal line. We would have marked the line here, and we would have just followed it to here. Let me see if we can shrink that line a little bit. Let me see if we can actually shrink this. Yeah, it won't let me shrink the line. Oh, there it is. So the line is here, horizontal line, boom. And as you can see, it hit the line. And as soon as it got to above around 50, so you got to kind of guesstimate this. If this is 30, this has to be 50. So 50 or 60. So you get the line around here. The closer it is to 70, the more it's going to come back. Like you see, it's the live example here. It's about to break down. It touched the lower band, and this is the upper band. So if it touches the upper band, that means it's about to, let me see, move it back. It's about to actually come back down at some point. But you don't want to enter the trade until it touches the line, and then the candle after that. Okay, this is on the 15-minute chart. This is a good 15-minute strategy. It's also a good hour strategy. Now it varies in between 4 hours and any other time frame from there. But if it hits that, and then the next candle, now this isn't 100% accurate, but it's 80 to 90% accurate in my view. And we're going to talk about the psychology and when you should trade and how often you should trade, and some more videos coming up. But there you go. If it hits that, it looks like it's about to come back down. So that will come all the way back down, and you will put your, now for the lower, let's see, the lower you want to go, it's the opposite way. So if we hit it here, we want to take our profit here, and then maybe, as you can see, the breakout here, we might look at this candle and see if it's still in the uptrend. Since it's still in the uptrend, we'll take a trade here at this candle and probably put our stop loss at the lower band right here. So we don't want to be greedy. We want to be right. We don't want to be greedy. A lot of people get greedy and then end up losing it. Like this here, if you would have took the trade there, and you would have took the profit a little above there or right around there, you might have had a chance of losing, because look how this candle closed out. And then it never really retraced back up to the starting point. And then it came all the way back down. So for the lower band strategy, for the lower sell strategy, once you start seeing it going in a sell, so you seen it here, it touched here, it broke this band here, it broke this band, and it started going down. Okay, once it breaks this band on a downtrend, means it's probably all the way going back down. Okay, so we would have took the trade here, and we would have won 1, 2, 3, 4, 5. So after it breaks the moving average going down, is when you take the trade. Okay, and you can draw the line here, and as you can see here, it started here on this downtrend at 70, and it came all the way down to 30. Okay, now you can ride that all the way down to the lower band. The lower band. Okay, so this brown band here. So you hit that on the moving average, it would have came all the way back down to this lower band. You would have hung, and you would have got out of that trade. You would have won that trade. Again, this isn't 100% accurate, but this is as accurate as I can come up with, and I can detail for you guys. Okay, so just to recap, if it hits the lower band, let's actually show you strategy. If it hits the lower band, actually, I want to stay there. There we go. If it hits the lower band, and then the next candle, after this candle, after it hits the lower band, it looks like it broke at some point. It hit the lower band. You want to go all the way and take it up here. Now, this looks like it broke the plan. It broke the band. So at that point, at that point, after it broke the band, after that candle closed, you would have took another buy, and then took it all the way up to the lower band. As soon as I can get it, took it to this lower band, hung out, waited for the next, after it broke down. Come on, stay. Oh, there it is. After it broke down a couple candles, then you seen it was going down all the way. So, yeah, it's not staying. Okay. So as you can see, it was going down. Oh, that's not it. Okay. You can see it's going down. Once it hits this moving average, so the middle green line, then you would take your trades. Then you would have took the sales. A lot of other people tell you to take sales right when it hits the band, and then take the sales like that. Again, we don't want to be too greedy. We want to be just right. So you can make your lot sizes a lot bigger, but you can. It's actually a good strategy here. All right. Click like, subscribe to the channel. We got some more videos on trading. We got some cryptocurrency trading. We got some naked trading. We got some Amazon stuff coming. We're going to just be contented out for 2021. See you in the next video.